Amazing, amazing, amazing. Go ahead and drop some numbers in the chat if you guys are excited, if you guys are fired up for this first ever smart money kind of foundation session that everybody is here to attend for the first time inside the Primeverse community. Hopefully, you guys are just as excited as I am and as Mike is to be delivering this session to you guys once every single week at this time. This is his first time delivering this kind of a session to the entire Primeverse community, but this is somebody who's been educating, who's been dialed in, who's been committed to the process of trading now for years. And I'm very excited to be introducing him to everybody. But drop in the chat where you're tuned in from and take a moment as well to go ahead and just let your teams know that this is a session that they can hop on. This being the first of many sessions at this time on a Thursday or Friday. Because it's the first one, many people probably don't even know that this is happening. So go ahead and let your team chats know that we are officially locked in live and about to dive into things. And yeah, shout out to those of you guys that are tuning in from all over the place. We got Saskatchewan, we got Woodstock in the building. I know it's late over there. Shout out to Brandon, tapped in 11 p.m. It's 11 p.m. for us right now in Orlando as well. We got Lilu, BC in the building, Calgary, Alberta. We got, is it Brunei? Brunei? You're gonna have to let me know, Odie. I might be mispronouncing that. Edmonton, Manitoba. Manitoba, it's even later, right? Isn't it like an hour ahead, or am I tripping?
Yeah.
An hour behind. Okay, okay, 10 p.m. What's good, Dom? Good to see you, Dom. We love to see it. We got the broskies on the session. Let's go. Edmonton, Kitchener, Victoria. We got Philippines in the house. Let's go. Let's go. Let's go. Let's go. We love to see it. Awesome, guys. Cool. Well, I'm not the one that's going to be speaking tonight. I'm just here to open this call and introduce you guys to one of the most teachable, coachable, and dedicated individuals that I've ever worked with in the trading space. And there's a reason that he is here and in the position to be educating you guys every single Thursday at 11 p.m. Eastern time. And obviously, whatever native time or day it is for you. This is somebody who, when I first met, would have been a couple of years ago, had some experience in the world of trading and investing and was really trying to refine his edge. In trading, we all have what's referred to as an edge, right? An edge is that little advantage in the market that allows us to be profitable. And he's somebody who took the material seriously, who studied the art, because trading really is an art, and applied himself. And he did what it took and what it takes ultimately for everybody here to learn this skill, to become a successful trader when it comes to analysis, when it comes to market executing any sort of a trade, placing limit orders, whatever the case is. It takes more than just, oh, I think the market's going to do this, or I think the market's going to do that, right? I think we can all agree that there's a little bit more to it than just that. And Mike is somebody who, again, he's here not by accident. Okay. He's here because he's put in the hard work, the dedication, the time, the energy, the effort, and the money ultimately that he's invested into himself and his education to now be able to provide the same concepts, the same fundamental principles that lead to profitability with all of you guys for free inside the Primeverse community. So go ahead and drop some numbers in the chat, drop some eights in the chat for Infinity and Beyond just for that, because this is not something that he's getting paid to do. This is not something that you guys are paying to have access to either. So don't take it for granted. It's I say this all the time to people. We often take that which is free for granted. This whole community of Primeverse is very easy to take for granted because it's free. It might be a little bit different if you're paying for it, but even then, you could go and get a gym membership tomorrow, be paying $100 a month for your gym membership, and still not go to the gym. And realistically speaking, some people are surprised that they're not seeing the results physically. It's like you gotta show up to the gym to get a six pack. It doesn't just happen because you're paying for a membership. Well, in this case, you're not even paying for the membership. It's just a free community that you have access to. And so do not take it for granted. All right. Know that who you're listening to has the results that you're looking for, has the skill set that it takes to really, analyze the charts at a high level and to execute at a high level. And so, without further ado, I'm going to step out of the way of greatness. Go ahead, turn some cameras on. All right. Give your attention to Mike over the duration of this call. Give the same energy to him that he's going to give to each and every single one of you. And Mike, bro, I'm proud of you. I know you're right next to me, but I'll keep looking at the camera. I love you, bro. Honestly, as a brother, a business partner, somebody who met as just a mentor and mentee. To be here now is special. And I'm very excited for you, bro. Well deserved to be educating alongside the Primeverse education team. And with that being said, again, throw your cameras on, give the attention to Mike, and be ready to take some notes. All right. I've seen what he has planned for tonight, and this is not just some, you know, random session. Okay. This is going to be a high level educational session. So be ready to take notes. Have your white paper and blue ink ready to go. And if you're taking notes on your computer or your phone, that's fine. It might just be better if you're writing down the notes and drawing some diagrams. Okay. But with that being said, Mike, I'm gonna pass the floor to you. Take it away, brother.
Appreciate you, Donnie. Thank you for the kind words. And it's one of those things with trading, you guys, that when I first got started, I had some experience inside of the space, and I didn't really understand what was going on. Right? I knew that you're able to make money, and then the market goes up and down. You can make money both ways, but I didn't know what I didn't know at the time. Right? I didn't have somebody to sit down, show me what I need to do, how to learn the proper steps of looking at a market, looking at a chart to understand where the market could potentially go to help me give that edge, right? And then I met, Donnie and a lot of other educators as well. And really, Donnie's the person that helped me the most in my journey over the last 4 years. And I truly have, I'm so grateful for everything that you do for the community, what you've done for me, and really just owe it back to you. But before we kind of get into it, I want to say a few things. Drop in the chat if you are brand new to trading, if this is like you're less than 3 months into learning the skill set. And then drop a two in the chat if you're beyond 3 months, maybe 6 months, 9 months, a year. I want to see where everybody kind of is at, right? Because we're all at a different stage inside of our trading journeys. And just seeing here, I see some ones, some twos. And yes, we are recording this call. But what's really important, right? It doesn't matter where you're at right now. If you're on day one or you've been doing this for 10 years, something that I've been focusing on very specifically over the last 4 years is always going back to the basics, right? Because if you don't have a solid foundation, it doesn't matter what you're doing. It could be trading, it could be going to the gym, it could be reading a book, it could be whatever you want to do. If you don't have the proper foundation set, you're not going to be able to get to where you want to go, right? You can't expect to jump into something like trading, which takes time to learn, and expect to see the results right from day one, right? Maybe you get lucky, maybe you hit one good trade and you make a lot of money, but that's not what we're here to do. We're here to help you guys learn a skill set that's going to pay you consistently, right? And that all starts with the basics. So I love to see the ones and the twos in here from everybody. That way I can kind of see where we're all at. And I want to take it right back to the beginning of smart money concepts, right? And drop a three in the chat if you've heard of smart money concepts. Maybe you've traded smart money concepts. And what I want to do, considering this is my first session with Primeverse, I want to do for the next 4 weeks a 4 week kind of boot camp to teach you guys the foundations, different terms and things to take note of and what to look for inside of the markets that's related to smart money concepts specifically, right? These are things that I've learned, that I'm still continuing to learn. And that's one of those things, is it doesn't matter how far along in your journey you are, right? You always want to be in a learning phase. Every single day, you're constantly learning. As soon as you think that you got it, that's the moment where you've actually failed. When you think, oh, I can do whatever I want, I know that this is, I see a fair value gap and then I take that trade, every single fair value gap, but the market doesn't necessarily react out of every single fair value gap just because it's there, right? It doesn't have to react from every single zone that you think it's going to react off of. And that's not what we're here to do. We're not here to trade based off what we think. We're here to trade off of based on what we analyzed, right? So let me just share my screen and we're going to get right into it. I have a PowerPoint ready for you guys as well. We're going to start off with a PowerPoint every week. Then we're going to jump over to the charts and take a look at some stuff there as well. But if you guys want to stay connected, there's my Instagram right there. I'm going to leave it up for a few seconds for you guys to scan the QR code. And make sure that you guys have access to everything you need to help people along the way. Because that's one of the biggest things is having somebody that can teach you and show you the way, right? Because Donnie didn't start off trading and know everything else. Time to build on the basics, build the foundation, and then scale to that higher level. And if I can help you guys, that's what I'm here to do, right? Make sure you guys all have the right resources, understanding, and education to get to that higher level. It's traders where they're just pushing buttons, hoping to make money, right? They're in some random uh, signals chat that they found on Instagram or on TikTok. They joined that and they see a trade. They're taking those trades all the time and hoping to make money, right? Then there's the institutions and major banks. These are the people that, or the organizations that control the money. They control where the market moves at different times, right? If you think that trading is just based off of luck or something that might happen, it's really not. It's something where there's over $7.5 trillion that are traded in the markets daily, and that money has to come from somewhere, right? If every single one of us puts $10,000 into a trade today, how many people is there on here? I think around 50 people, right? We're not going to be able to make a big difference or a big dent into the market where we can position ourselves to make a little chunk of that money that's being moved, right? But we're nowhere near $7.5 trillion, right? That's 12 zeros, which is a huge number, right? But the difference between retail trading and institutions and major banks, when the way that they trade very strategically. They wait for the retail traders, which is people like you and me, trying to learn the skill set, looking at different chart patterns and understanding different strategies and things like that. They're waiting for all these people to get into the market. And then what they do is they sweep all of that, basically push it the opposite way of what majority of people are doing, right? Because you have to think about it this way too, where the major banks and the institutions, the people that control the money, control the markets, they can see when people place trades. They can see all the orders that are being filled, whether it's buy orders or sell orders. And what they're doing is they're basically trying to take all that money out of the market, right? In order for you to be able to place a trade, there has to be somebody on the opposite end that also is taking a trade, right? So if you're wanting to buy the market, there has to be somebody selling that currency in order for the market to either move up or down, right? It's either you are making somebody else money or somebody else is making you money. Does that make sense? Right, and this is why 90% of traders lose is because they trade off of reactive trading. They don't understand that there's bigger fish at play. They don't understand that there's certain areas where the market has to move to, that the market is manipulated, and they're just wishfully placing buttons and trying to make some kind of money, right? Following a chart pattern. This is something that I used to do all the time, right? Is type in on Google trading chart patterns, and then all these different kinds of things pop up, and then that's what you're looking for, right? You're waiting for this pattern to align, and then that's where you execute your trade. The banks can see that when that happens, they can see that there's multiple people, not just the 50 of us on here, but hundreds of thousands of people placing trades and trying to see these chart patterns to go in a certain direction. And then they move the market in the opposite direction, right? They basically sweep the liquidity or take everybody's trades out, and then after they've taken all that money out, right now they can push the market in the desired direction after that, right? Why is smart money different? Right? There's accumulation, manipulation, and distribution. Accumulation basically is something where the market is consolidating, right? We're accumulating multiple trade orders, right? This is when you see, for example, let's just go on to a chart here just to kind of make this make sense a little bit so you guys can see this once this loads here. Let's go to gold and just take a look and see what we find here. All right, so for example, if we zoom out here, right now in here, right, this area, we're gonna just highlight this with a box. Inside of this area, right here, there was trade orders being accumulated, right? We had hit a high of 5,219 roughly, and this low here of 5,144, right? Inside of this area, there's people that they see different chart patterns, they see different ideas and things that, they want to see the market go higher, right? Or some people think, okay, now we have this fair value gap in here. Maybe we sell off of here. Other people see fair value gap here. They buy off of here, right? Maybe you're able to make a little bit of money in these areas, but what's happening on the other side, what the banks and institutions are looking for, they're just waiting for everybody to get into their sell orders, their buy orders, and then they break this consolidation here, right? They they see that, okay, there's a lot of people buying with stop losses beneath this last low here, right? Because we want to put the stop loss beneath the last low. If it hits that level, then we're going to see the market potentially continue lower. Or there's people who have their stop losses up here and they're selling the market, right? And hoping for the market to continue down and break these lows and continue lower. But what ends up happening, which we're seeing right now, is after this accumulation period here, what happened is we had a quick move lower that took out all these people that were potentially buying from all these different areas, right? Took out all these stop losses, went down to 5,130, and then now we are starting to trade a little bit higher, right? With probably what we're going to see over the next couple of days, maybe not this week, but next week, because the market closes tomorrow evening. We're probably going to see this market continue higher, and potentially we can go see a new all-time high. But what we're getting at here is all these people that were putting in trade orders here, buying this market, expecting it to go higher and higher and higher. Eventually, they got stopped out because their stop loss was below this low, or it was below this low, or it was below the next low, right? And they took out all these traders, and now they're moving the market into the desired direction where they want it to go. All right? Is it going to happen right away? No, right? Sometimes we expect to go down to the 1 minute chart and look for all these different areas that the market could be potentially sweeping and things like that. But we have to kind of take a look at this from a bigger point of view. Where on the 1 minute time frame, you're so zoomed in that you lose track of everything else that's happening, right? The banks, they're not looking at the 1 minute time frame and trying to fill all these gaps and all these orders here so that they can move the market higher for 50 pips. They're looking on daily time frame, 4 hour time frame, weekly time frame to see where can we move the market, where is there a lot of orders being placed, and where can we position ourselves to move this market higher or lower, right? For example, this is a great example here where we were on an uptrend on gold for the last, it's been a long time since we had a drastic move down, but basically from December 2025 all the way up until This was about January 2026. So almost it was a full year where we saw gold go from $4,200 all the way up to $5,600. And then what ended up happening is everyone's buying and buying and buying. They see gold is at a new all-time high. We're just going to continue because that's all we've been doing, right? The last year we've just been going up. There's no way that we can go down. And then boom, the market drops $1,200 in just a few days. Right? I've seen a lot of people lose a lot of money during this time because they simply did not understand that the market was going to stop going up. Right? There comes a point where the market can't continue to go up or it can't continue to go down. It has to stop, slow down, and go the other direction. Otherwise, trading wouldn't be something that we do. We would just all buy every single currency, let it go up, and we would make money. Right? If there isn't somebody on the opposite end of that, the market can't equal itself out, hit a baseline, and then continue in the desired direction. Right? So what we saw here, this was a very aggressive sell-off that we saw at the beginning of this year. Right? But what ended up happening was, let me just get rid of all of this stuff here. Yeah, that's okay. Anyways, what we saw here, right, was we had lows up here at 5,233, right? We had lows here at 5,043. We had lows at basically 5,000, 4,985. We had lows here at 4,000, right? You get the idea. And there's people who have stop losses at all these different places, right? Trading a currency like something like gold isn't just people day trading it through MetaTrader 5 every single day, right? There's people who are buying physical gold. There's banks and institutions and very wealthy people who are buying physical gold here. The market drops. They ended up losing money here, right? Yes, the market is now up, but what ends up happening is people see people trade two different ways, right? Fear of missing out. They see gold just went crazy. We increased $1,300 in a short period of time, and a lot of people bought in gold here. A lot of people bought silver at the top, and then when it dropped, what do? They don't want to continue to lose more money because they think, oh, the market went so crazy high, now it dropped so aggressively, it's just going to continue going down. So now they sell off that currency. Right now, the market, ends up happening with the banks and institutions, this is how they trade. They know that people are buying here, right? They know that people missed out on this huge move. They're buying in here in the fear of missing out that it can continue going higher. And then the banks now have enough buying pressure. Now they sell the market, right? And now, while this market is going down, people are now also trading out of fear, trying to sell off their currency, trying to sell their trades and close their trades, make sure they're not losing money, right? Now the banks have selling pressure here and they can go and continue buying the market and move it in the desired direction, right? That's why being able to understand smart money and how the market really works, how the market moves, and understand that it's the markets are manipulated. This is going to help give you a much better edge in this market, right? So that you can understand when to buy, when to sell, when are people, potentially getting to that point where they're at the fear of missing out or they're trying to sell their money so they don't lose any more money, right? This is exactly how trading works. And a prime example of that is Bitcoin and cryptocurrency, right? This happens in all currencies, but Bitcoin and cryptocurrency specifically, this is where we see a cycle every 3 to 4 years, right? We see the market. I have this marked up. This is from the last kind of low before we hit the big bull market in 2020, 2021. Bitcoin was sitting at $7,000, $8,000. At that time, nobody wanted to buy. Everybody thought, that's it. We had hit 20,000 here. Bitcoin dropped back down to 3,000. It's not going to be worth anything, right? Then Bitcoin starts slowly creeping up on 20,000. Then it continues to go higher that 40,000, 50,000, 60,000 people are saying, I missed out buying Bitcoin at 8,000. I better get in now so I don't miss the rest of the move. Right? I have to get in and make sure that I'm on the right end so I can make money. They buy in here. That's where majority of people start buying Bitcoin, start buying gold, start buying different currencies, and then the market drops the opposite way. Now people are scared to lose the money that they invested. They sell off their losses, cut their losses short, and now the banks can push the market back in the desired direction. Right? When I got started in trading and really understanding how these markets work and how the markets are manipulated, Bitcoin was sitting at around $15,000. This exact date, November 22nd, 2022. That's when I got started in this industry. Bitcoin was the lowest it has been in 4 years. Right? People didn't want to buy Bitcoin then. People were scared. They were saying, Bitcoin's done. It was supposed to go to 100,000. And you hear this every single time. Every single time. Bitcoin creates a new high. People start buying because they missed out. Then it creates a low, it goes lower. People don't want to buy because of their bad experience, because they lost money. They didn't understand how the markets work. They didn't understand that it's manipulated. Then they sell it off and wait until the next run. Right? And then they get in when it's too late. Where I'm getting at with this is, as smart money traders and learning smart money concepts, we want to find these areas and understand, when is the market being manipulated, when is the right time to buy, and when is the right time to sell, right? Because we can buy and sell these currencies all day long, but there are certain times, maybe of a year, of a month, where you should be buying a currency rather than selling a currency, right? For example, right now, Bitcoin. Would you be buying Bitcoin right now at this current area? Right now, probably not. Because on the weekly time frame, this is what we're going to get into next, is market structure. On the weekly time frame, right, we have now broken a significant low. We were sitting at 78,000 was kind of that low, where at first, right, we were consolidating here at about 70 to 50,000. Then we created a new high at 110,000. We dropped lower, and now we continued that trend to 126,000. Now we have actually broken that support level of 78,000, and we are now, I'm expecting the market to go down to about 40 to 30,000. Why is that? Because a market, if we go back to the slides here, a market moves based off of structure, right? There's uptrends and there's downtrends. There's higher time frame uptrends that might have lower time frame downtrends in them, right? But to keep this simple, if you see higher highs and higher lows, which I'm going to draw out for you guys in a second here, that is a consistent uptrend. And if you see lower highs and lower lows, that is a consistent downtrend. You want to see at least two higher highs and two higher lows in order for it to be considered an uptrend, and two lower highs and two lower lows for it to be considered a downtrend. We usually look at this on that higher time frame to understand the bigger picture, right? We don't want to trade on smaller time frames where it's so small what the market is doing, where the price is going compared to the bigger time frames. The bigger time frames help you understand which direction a market is actually trending in. Right? And then the smaller time frames, this is where we want to wait for the reactions and then get into our trades. Right? So we have two higher highs, two higher lows equals an uptrend, two lower highs and two lower lows equals a downtrend. And if the market is just moving stagnant side to side, there's not highs being created, not lows being created, we call that a consolidation or a liquidity buildup. Right? So what that looks like, for example, here, because Bitcoin actually has a very nice uptrend that we were looking at here, right? This is on the weekly time frame. You can look at a market structure typically on the 4 hour time frame, but just to show you the weekly time frame market structure that we have here, right? We see that we have this high being created here, right? We see these highs got taken out at 48,000, and then these highs at 66,000, which was the previous all-time high, also got taken out right here on this move higher, right? So how we're going to mark this up is you want to, if I can find this here, there we go. We have here a lower low. Right? This is the lowest point that the market was at before we started breaking above these highs. Then when we actually created this high, we now created a higher high, right? Because this high was higher than these previous highs. And now what we're looking for is a higher low, right? We're looking for a low to be established that is higher than this lower low where we started this move that created this higher high. And so after the high gets created, we wait for the market to move lower. We see a higher low. From this area, now for it to be considered an uptrend and for us to look for continuation trades in the desired direction, which is up in this case, we're waiting for this market to create a new higher high, right? And we see that being created right here. In a higher high, you can identify a higher high and higher lows because at some point, the market, what will happen is it can't go higher anymore and it has to retrace. It has to come down. And once it starts doing that, which we can see here, right, we topped out at 73,000. We moved lower, right? We moved higher again, but didn't break 73,000. And then we just continued lower to about 48,000. That's where we established that low. And from that low, we now created a new high, which gives us the new higher high. So this right here, these four steps, these four areas, that's how you identify proper market structure, right? Usually on the 4 hour time frame, we're doing this on the weekly time frame, just so you guys can see what I'm looking at here. Right now, on this bigger time frame, we identified that we're in an uptrend. And when Bitcoin is in a bull market like we were in for the last 2 years, right? Because this was back in 2020, end of 2023, and this high is, you know, close to the end of 2025. This is about 2, 3 years that the market was consistently going up. And we can see that pattern over and over and over again in crypto. We're not going to go over that today. That will be for another session. But what we can see after this high, what did we create? Can somebody put in the chat box here? What do you see right here that is being created? Is it a higher high? Is it a higher low? A lower low? What do you guys think? Let me see in the chat box here. A higher low, higher low, higher low, higher high. So we created a higher low here, right? Why? Because this low, right, after creating a high, we can only create a low unless the market continues going higher, then we make more highs, right? But we slowed down here, the market moved lower, we created a new higher low because this low that was created after this high is higher than the previous one that we have. All right, does that make sense? Drop a 2 in the chat if that makes sense. And from this area, now that we can see, okay, we have one area, two, three, four, We have our two higher highs and our two higher lows. I would consider if you're looking for two lows, it doesn't have to necessarily be two higher lows. It can be two lows, which we have here. We have A, B, C, D. And on E, this is where we can look to potentially enter into the markets. Right? Something that we're going to cover is fair value gaps or imbalances, right? Where the market has left behind clues of where it's going to come back to or retrace to. And this is an area that if we look here, we actually see a gap in the market, right? It's where the price moves significantly into a certain area that there is the candle before this big candle that has this gap. The candle before and the candle after do not fully close this gap, right? If we look at all these candles here, let's take this one for example. This candle with the wick, it was the full size of this candle, and this candle after also played lower into this area and to this candle, so we can see there's no gap here. Right here, for example, we have a wick that goes a little bit higher. Then we did have a gap here as well, but the second candle came, filled this fully, and then we continued. Right, so here the market showed us we have a gap. Right, we have two, we have one here and one here. Normally, what we do in this case, before I take a trade or before I look for an entry, I want to take a fib, which we're just quickly going to touch on. We're not going to fully break that down on today's session, but the fib basically gives you percentages of where the market can return to or trade back into. And what we look for to confirm that we are in a trending market is the market has to at least return back to 50%. Right? 50% here is 0.5, the green line that goes all the way across. And if we actually pull this from this low here to this high, we can see we actually just exactly got 50% here, and then we continued higher, right? So that was from our low to our high is where we pulled the fib, and the higher low should be at least hitting 50% of a retracement on this fib. Now, for us to get into the market here, we take this fib from the higher low, move it to the higher high, the new higher high that we created, and we're looking for a minimum of a 50% retracement. How smart money works is we look for multiple different areas, right? Multiple different things to align. One of those things can be a Fibonacci retracement tool, which we see here. We have 50%. We have a fair value gap, which is a gap left in the market that the institutions and the banks, they will bring the market back to that place just to reset price, right? Like I said before, we can't just keep going higher. The market has to come down to a certain level before it can continue higher. And 95% of the time, it will be to 50%, and then we continue higher. Sometimes it will come a little bit, it won't go directly to 50%, but maybe it will go to 38.2%. It will go up a little bit, and then it will come down to 50%. Right? We want to make sure we wait for a 50% retracement at least. So from this area, just something that I want to show you guys. If you just took market structure, you just took a fib and just a fair value gap, at this time, we could see that we are currently in a bull market inside of Bitcoin. We haven't seen an area that we have broken yet that's telling us that we're going to go lower, right? We just see normal market structure. So if you understood this, you could have actually put yourself in a position to be able to buy Bitcoin at around $75,000 to $80,000, and Bitcoin went up to $126,000. This was an area that, alongside Donnie and other educators, we were waiting for this area for quite some time, right? The market made this fair value gap on November 4th, 2024, and didn't come back to it until February of 2025. Right, a whole 4 months we waited for the market to return to that area, and then we were able to see this move higher. Right, these are things that we want to learn, understand, and know when to get into the market, when is the right time to buy a market. Right? Obviously, we break this down on a smaller time frame and then get our entries from here. But just looking on a bigger time frame, understanding market structure, you can see that we have a trending market. Until these lows here get broken, we're looking to continue this trend. Right now, on the flip side, if I get rid of this here, we can see that this low of 73,000, 78,000 that we have here has now officially been broken on the higher time frame, on the weekly time frame, which is significant because after Bitcoin goes on these major runs, which we've seen in the past, right, we see new all-time high get created, we see a retracement, we see a new all-time high again, which we have here, all-time high, retracement, new all-time high, and then we go into our bear market, where the market just drops to a certain level, usually about 80% down from what the high was. In this case, we went from 69,000 to 15,000. Now I'm anticipating from 126,000, we're going to roughly 40 to 30,000. What does that mean? Do we want to be buying or selling Bitcoin at this specific time? Right? Probably not buying. Maybe we can see a retracement from this low now a little bit higher and then we continue lower, but the overall trend of this market now, if we look on the 4 hour time frame, a little bit smaller than the weekly time frame, we can see and tell that we are now in a downtrend on Bitcoin. We have been making very steady highs and lows on these smaller time frames, and on the weekly time frame, we broke below a very significant level. And considering the cycle that Bitcoin goes into, we had 3 years up, we have 1 year down. Previously, from this low that we have here is 2020, and this high here was 2021. So it's a little bit less, right? But this move really started happening back in 2018. After the bear market, we hit a low point, 2018 to 2021. We were seeing steady gains. We had a small dip here between 2019 and 2020, but overall, this move started from 2018 to 2021. It ended after 3 years. We saw for one whole year, end of 2022, we hit that low where the market hit the lowest after the all-time high, right? So this is a cycle that we see, and this is what we're going to look for here as well, right? So we're going to cover that more on later sessions, but just to show you guys market structure and why it's important to build on market structure and understand which way is a market moving, right? If a market is moving consistently higher, making higher highs and higher lows, we don't want to be selling that market, right? Yes, we can see small moves or get this retracement and sell off here, but we want to find the areas and find the big moves that are going to help us see market structure, understand why we're getting into a trade here, understand all the confirmations, what the banks are doing. They're manipulating this market here, making people sell off, and then they can buy in more here, make more money. People get in here again because they're greedy. They have the fear of missing out, and then the banks can drop this market lower again. All right, so market structure is the basis of what we trade. We want to understand, are we in an uptrend? If yes, we are only buying. Are we in a downtrend? If yes, we are only selling, right? And the market can only move three ways. If we're moving sideways. There's nothing really happening. We're stagnant. We're waiting for the market to break out into one direction, and then we look for a move into the opposite direction, right? Because after we consolidate, I'm just going to draw this out here. The market will move something like this, right? And on each end, we have sell side liquidity, right? People stop losses when they're buying are going to be below these lows. People stop losses if they're selling are going to be above these highs. And at some point, it's not going to happen right away. Sometimes it might take a while for enough orders to be processed. The banks and the institutions who are trading trillions of dollars in these markets, they're going to move this market and take out these stop losses. And then eventually, what they're going to do is from this area where they stopped everybody out, they're going to move the market back into their desired direction. And we're going to see the market start to trend in the opposite way like that. Does that make sense? So what we're waiting for is for a consolidation to happen, for market to sweep into one direction. It can be higher, it can be lower, right? We just want to wait for a sweep in either direction, and then you will see that the market will go into the desired direction after taking out all these stop losses, all these lows. Right? Because at this point, yes, people are selling, but people get greedy. They're waiting for the market to continue lower, then the market goes higher. They're stopping out all these stop losses anyways. Right? So that's kind of what we're looking for is we're waiting for a market to consolidate. It doesn't have to be on the weekly time frame. Weekly time frame is going to take some time for you to see these things unfold, right? But we're waiting for a consolidation, waiting for a sweep of those lows, those highs or lows, and then for the market to go in our desired direction. All right, so break of structure. This is something I want to cover too, where a lot of people get break of structure confused with a change of character or a market structure shift. And a reason I put this in here, I want to give you guys just a few basics every single week. This week, we're going to do market structure, break of structure, change of character, and liquidity. And then next week and the following weeks, we're going to go into some other basic steps, right? Basic things that we want to look for. So a break of structure is a continuation of a trend. It confirms the direction of the trend, and we want to look for a body break, which is a strong continuation of that trend, not a wick break, right? So what I mean by wick break or a body break, for those of you guys that are newer, I know we have a lot of new people in here as well. If we see right here this low that we have here, a body break would be that we have a candle that closes below this previous low here, right? So the low that I go off of on the weekly time frame, we probably should be looking at the wick because it's more time. If we break it down, we can see more candle bodies in this area because there's like 4 hour time frame, 1 hour time frame, 15-minute time frame, all these different time frames inside of this weekly candle, right? But what we're looking for is for the body of a candle to close below. That's where we're going to see the continuation of that trend, that break of structure. All right, so in this case, if we, there we go, trend lines is what we're looking for here. If we take a trend line and move this across, right, we can see that this candle here on the weekly time frame closed below the low of this higher low that we had before. And if we take this even lower to, oh, I have that selected still, to the wick, we can see it wasn't this candle that closed below, but this candle. So that for me indicates that we are going to continue to go lower, but we probably might see a move higher first because the market can't just keep going down and has to balance itself out. Like we said, we might see a move come higher. We have a fair value gap here, right? We have resistance here as well, and the market has to retrace, move back, and then we can go in the desired direction. But this break right here, and the candle had a closure with the body below this low, indicates that this is a strong break of structure, right? If it was just the wick that was below, it wouldn't be considered necessarily a break of structure. In that case, it might have just been a liquidity sweep, right? Where we had a quick move lower to take out people's stop losses, people's orders, and then to move back in the desired direction. But if we have a body close, now it's strong that we are going to continue in that trend, right? We can see we had here, this area, we had a candle close below as well. We created this low here, went higher, created a little high, and then lower again, right? So we are now trending lower. We're waiting to see where's the market going to go before we can now continue selling it and continue this trend that we have going on here, right? So break of structure, we want to see a strong close, not a weak close. A change of character, right? This is the first sign of potential reversal. It's different between a break of structure because break of structure is the trend fully changes, right? We're now going from an uptrend to a downtrend, or vice versa, a downtrend to an uptrend. And a change of character is basically showing us that on most of the time, smaller time frames, that the market could be shifting to go from an uptrend to a downtrend, but it's not confirmed, right? We want to see these bigger areas be confirmed with a break of structure lower. The trend is continuing lower, where here, if we see this low, this first low that we broke here, we could suggest this to be a change of character because yes, we were going higher, the market came lower, but if we look at this, what are a lot of people looking at? Right, they're looking for fair value gaps and all these different areas where we could have just had this area that we traded lower into, created a higher low, and then went higher. Right, so this is a change of character where we can see potential reversals from uptrend to downtrend. This low being broken here, this is a break of structure. Now we are seeing, okay, this is a strong push to the downside. We're probably going to continue lower. This change of character up here, it could suggest that we're going to go lower, but it doesn't confirm it. Does that make sense? Drop a one in the chat if you understand the difference between those two. I want to make sure that this makes sense for everybody. Awesome. Awesome, awesome. And then we have liquidity, which is the last thing I want to cover today. We're catching up on the hour here, but I do want to get through this because liquidity is a very, very important thing to understand inside of trading, and especially with smart money concepts, because most of the smart money concepts trades that we look at, they start off with a liquidity sweep, right? Like I said before, is the market can move in three different directions, right? We're going to go back to this diagram here. If we see a consolidation happen, this consolidation is just building up buy orders and sell orders inside of this area. The liquidity is now these lows are all different kinds of orders, right? It might be if you're buying, you could have your stop loss below this low so that if it goes lower, you're not losing any more money. If you're wanting to sell in this market, you can put a sell stop order, which is a different type of sell rather than having a sell limit up here, right? Waiting for the market to come higher, enter you in for a sell. You're waiting for the market to come lower to this area, and then you continue this sell down. right? Then there's buy limits, stop losses, all different kinds of orders down here, and vice versa. Everybody has their orders up here as well. And the liquidity is all the money that's being pooled up in these areas, right? Like I said before, is the banks and the institutions, they see when people have these orders set, they see where we have our stop losses and entry zones and all these different things. And before they move the market into one direction, in their desired direction, they're going to first take out lows, or vice versa. If we invert this, right, they're going to take out highs and then move the market lower into their desired direction, right? The liquidity is all of our orders, everybody's orders that are being placed here. That's what they're waiting for in this area to happen, is to see all these orders. Then they make a quick move into one direction, and then they push the market in the opposite direction from there, right? A prime example of this, if we go to the 4 hour chart and go over here, right? We had basically on the 4 hour time frame in multiple different areas. For example, here we had an area where the market was steadily going to these lows, right? Were equal lows. We have equal highs here. And eventually the market came lower, a quick move down, took out all these orders, and then we started trending higher again for a short period of time. Right? If we look at this on a bigger scale like this, we had an area where the market peaked at 73,500. We never came above, right? We tested it, we tested it and tested it and tested it, never came above. And the lowest point that we had hit was about 53,500, which was also roughly at the support level here. But at some point, the market came lower than this area, lower than this previous support area that we had here, right? We can see, let me just put a trend line here. All of these lows ended up getting taken out before we had then continued higher, right? We moved into the desired direction. Did it take some time? Yes. But it all started from a move where we had a buildup of orders, we swept lower, and then we ended up going in the desired direction, right? Same thing here. We had, this was a little bit of a bigger one, but from this area, right, we had from November 9th, 2024 up until February 25th, 2025, a high of 109,000 and a low of 88,000, where the market was consistently playing in this area. I mean, this is just bigger time frame. If we break it down to other time frames, we can see it a little bit clearer as well. And consolidations inside of this 4 hour time frame, maybe a 15-minute consolidation or a 30-minute consolidation, right? But just a bigger time frame, we can see that we had this area from 88,000 to 109,000. And eventually we had one quick move that took all of this out. We went lower, right? Played down into 77,000, even 75,000. And then we started this move back up all the way to $26,000, where we ended up peaking, right? But it all started from having an area where there's a lot of orders being accumulated, one quick move down, and then we start the process of continuing higher. Right, that's where we can look at this on many different time frames. We can go even to the 15-minute time frame. and see if we can find something more recent. Usually it always starts off by a consolidation, which we see right here on the 15-minute time frame. We had a high of 63,500 and a low of 62,700. We played in this area consistently. We had one quick move down to 62,500, which took out all of these orders here on the bottom. And then we had a very fast move up and we continued higher to about 70,000. All right, this was recent. This is the most recent kind of area that we've seen here. All right, but it all started from a low point being created, right? The market, like I said, can't keep going down. It has to at some point go in the opposite direction and make up for what it lost in the past, right? Make up for time and these zones that we have in the market. And how do we do that? How did we start this reversal process to go back up? We slowed down, we consolidated, we swept these lows, swept these stop losses and all these orders, that liquidity that was built up here, and then we started that process higher. Right, this is where trading starts to get fun. You're looking for all these different areas. Yes, the market can sometimes move thousands of pips against you, or maybe even in your desired direction, and then it will reverse, come back down to an area, stop, consolidate, move side to side, and then push in the desired direction where it wants to continue to. Right, but it always starts off with a consolidation. At some point, the market will have an area just like this before it makes its big move into that direction. Does that make sense? Drop a two in the chat if that makes sense. Let me see here. Yes, two, 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 two. Awesome. 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 Well, that's what I want to leave you guys with for today. I hope you guys all got some value. Hope you guys all enjoyed tonight's session. And like I said, we're going to be doing weekly for the next 4 weeks. We're going to go into more of these concepts, more in depth of the basics with fair value gaps and order blocks and all these different things that we can look for inside of smart money. But today I wanted to keep it simple, talk more about market structure and liquidity, show you guys where those buildups are happening and where we can look for potential areas to position ourselves after we understood that the market, we want to see the market trend in a certain direction, right? And if it hasn't trended in that certain direction yet, we want to wait for the market to slow down, consolidate, show us which way it wants to go from there. But with that being said, I hope you guys all enjoyed. I hope you guys all got some value, and I will see you all next week on Thursday at the same time. Peace.